In this video, we're going to talk about the rate cuts that have finally arrived in the US and what this means for you and the economy using Canada as an example. This is because Canada has cut rates earlier than we have, and we have some data on how their economy is evolving because of it. So the Federal Reserve just lowered rates for the first time since 2022, more than 2 years after they started raising interest rates when inflation began to get out of control. Now, the Fed started their rate cutting cycle now with a big one, a 50 basis point cut to jumpstart optimism again in our economy that has arguably slowed down to a crawl. On January 2022, headline CPI inflation was about 7%, and the unemployment rate was at 4%. Today, after over 2 years of extremely tight monetary policy and high interest rates, headline inflation is around 2.5% and the unemployment rate is at 4.3%. So if we stop right here and don't consider any forward-looking data, the Federal Reserve has indeed accomplished their soft landing objective. Inflation has come down, unemployment has barely moved higher, all good. And now the Federal Reserve is about to cut interest rates that will add quite a bit of relief to the millions of consumers that have outstanding credit card balances and home equity loans that have been very expensive to borrow. 50 basis points of relief upfront is quite a decent relief, and the best part is that it's immediate. The only downside that I can see to lower rates is that savers who want a higher risk-free rate in their savings account will be forced to look at other options. The big question is, though, did the Fed nail the soft landing, or are they too late and behind the curve? To try to answer this question, we're going to look at our friends up north in Canada as a guide. It's definitely not a perfect guide because Canada's economy is structurally different from ours, but at the very least, we have some clues as to what we can expect. So over the last 2 years, Canada's economy has more or less been devastated by the high interest rate environment that the Bank of Canada has set forth to tame inflation. Our friends up north have not had a soft landing, and the economic situation there is much more difficult for them. Just recently, Canada's inflation rate has gone all the way back down to 2%, meeting their central bank's longer-term inflation target. We all know that here in the US, inflation has taken its time to drift back to the 2 to 3% area, but in Canada, inflation has now officially gone back to the 2% target. The problem with Canada's inflation rate getting back to 2% though is now that there is the risk of going below their central bank's target. This means that Canada is now at risk of deflation, and that would jeopardize an attempted economic recovery because deflation means lower pricing power for businesses and lower profit margins, which would result in more corporate layoffs. Interest rate cuts may not be as effective once the economy has entered deflation. In fact, we're already seeing quite a lot more layoffs in Canada compared to the US. The difference is really large, actually. In Canada, the unemployment rate is at 6.6% and is much higher than those in developed countries. Statistics show that for every vacant job in Canada, there are 2.4 unemployed people. Here in the US, this ratio is closer to 1.2. In the most recent month, almost all of the 22,000 Canadian jobs that were created were part-time in nature. It's very hard to find a full-time job. Now, what is less known to people outside of Canada is that this economic problem has caused the Bank of Canada to already cut interest rates 3 times since June of this year by 25 basis points each time. So they are ahead of the US Fed by about 3 months. Now, there is talk that there may be a jumbo-sized 50 basis point cut coming soon at their next meeting on top of all the rate cuts that they have already done. In previous videos that I've done in Canada, we talked about how interest rates hits their economy in a very different way compared to the US. A sizable percentage of Canada's housing market is tied to variable rates. So when rates rise and fall, the bottom line impact on homeowners is very real and immediate for their monthly mortgage payments. This is particularly meaningful because almost 1 in 4 homeowners in Canada have a variable rate mortgage. In Canada, mortgages are typically for 25 years, and the rate resets every 3 or 5 years. In the US, homeowners can enjoy a fixed rate for the entire life of a 15-year or 30-year mortgage. The frustrations that Canadians are going through can be completely captured in this video here, where Prime Minister Justin Trudeau is greeting a number of steel workers. In this video, you'll hear the conversation between Trudeau and the worker who is expressing his frustration about the high cost of healthcare and job security concerns. You'll also hear the worker say directly to Trudeau himself that he believes that he'll only be in office for another year and that he doesn't believe anything he says.
Hey, I'm
Find a spot.
just one of
Prime Minister again. Well, we got donuts over here if you want to thank you for your hard work.
I can bring some for my kids here.
Okay. The 25% tariffs we just brought in on Chinese steels can help you out.
That's going to keep my job,
yeah. That's
yeah.
What about the $400
40% taxes I'm paying, and I don't have a doctor?
The $400 million that we invested to invest in the electric car means you're going to have a job for
I think you're only here for
years
another year. We won't see you around probably another year.
Well, that's what elections are for.
That's right, that's right.
And I look forward to everyone exercising the right to vote.
Yep.
And the basic choice, we're going to invest in you and your jobs.
I don't believe you for a second.
Dental care? Do you know anyone who got dental care?
Yeah, I pay for it myself.
Okay.
We're like 3 years
you
behind.
You have a job and coverage?
Yeah,
but we
four
got
people
seniors.
in my family.
We've got
Every time we go for a dental visit, it's costing me about $50 in my pocket per person.
Okay.
Why? I have a good job. You're not really doing anything for us, Justin.
Well, actually, we just invested so 500,000 people who hadn't been to the dentist got to go to the dentist over the past few months.
Probably like my neighbor that doesn't go to work because she's lazy.
Well,
she just doesn't go to work. She lives the same life I do.
Most Canadians try to stick up for each other, and that's what we're going to keep doing.
Yeah.
Good luck and take care of your family, sir.
No, I'm good. Thank you.
All right.
Have a nice day.
Have a good day, sir. All right. All right, the other guys got the donuts. Excellent.
Now we can see that people are trying to be as productive as possible at their workplaces so that they can make sure their output is solid for their companies. Now before we continue, I want to introduce our video partner that helps with productivity tools and helps to sponsor my research efforts. Now, one thing that shaves a little bit of productivity off my workflow when I'm in deep focus mode is remembering certain passwords to log into sites, especially ones that I haven't been to in a while. Many times this means I'll have to reset the password, and let's just say I don't enjoy that process because it's one more password I have to remember. Research studies concluded that people waste 11 hours per year resetting passwords, which might not seem like a lot, but that's actually one full working day. For organizations and business owners, password resets for staff can end up being a bigger productivity loss. As I don't want to worry about that, I've started using NordPass as my password manager. NordPass allows me to store, manage, and share passwords, credit card details, and other sensitive information with ease. It also flags breaches and highlights personal data that is circulating the dark web. These days, my phone always has scam messages from unknown numbers, and my email inbox is sometimes flooded with unsolicited spam messages as well. I don't even know how they have my contact information, but phishing is on the rise, and I want to make sure that my info is protected from any data leaks and that I'm protected from any financial loss. Now, I don't have to spend time thinking about data leaks, lost passwords, or password resets, and I can focus without any productivity distractions. Being more productive means that I can spend more time on the high-value aspects of my day and do not need to worry about the little things that slow me down. If you're watching this and have a team, you can get a 3-month trial of NordPass Business. No credit card is required. Use the code Larry Chung at nordpass.com/Larry Chung. The link is also in the description. Okay, now back to the video. I'm going to read and paraphrase this piece from the BBC here because it highlights the political turmoil that Prime Minister Trudeau is going through as his citizens are reeling from a weak economy. See here, in his 9th year as Prime Minister, Trudeau's approval rate has plummeted from 63% when he was elected to 28% in June of this year. This sinking popularity has already brought consequences to Trudeau's governing Liberal Party. In a recent by-election, the party lost a Toronto federal seat that it had held for 30 years to the opposition Conservative Party, which is a major sign of trouble. On Monday, Trudeau and the Liberals face another set of tests, a crucial by-election in a Liberal stronghold in Montreal, Quebec, and the resumption of Parliament, where Conservative leader Pierre has vowed to table a motion of no confidence as early as possible in an attempt to bring down the minority government. If the Conservative leader is successful, Canadians could head to the ballot box. And if current polls are any indication of how they might vote, the next federal election may mark the end of the Trudeau era. So in some ways, Canada is a reflection of what has happened to the economy due to high interest rates. There is clearly a housing market crisis because millions of people struggle with monthly payments. The unemployment situation seems to be getting worse, and with the job market not seemingly responding to the rate cuts that Bank of Canada is doing, the outlook seems to be quite challenging for a lot of folks. The key here is that lowering rates does not seem to have an immediate effect of boosting the Canadian economy. If anything, it's confirmation that things have gotten really bad and the government now needs to step in to do more stimulus. So this makes for the all-important question, is what Canada is going through going to happen here in the US? I'm going to say that the answer is likely no. This is because if we look at the Canadian economy compared to the US, a big driver for us is big tech, whereas in Canada, their economy is much more tied to commodities and traditional lower growth industries. We can see this in the difference between our main stock market index, the S&P 500, and the Canadian index, the TSX. In addition, our housing market has most homeowners fixed at their 30-year mortgage rates, so even though inflation has been horrible in the past few years, at the very least, homeowners haven't needed to shell out several hundred more dollars a month to maintain their mortgage like our Canadian counterparts. The US for sure is going through severe problems such as a debt crisis and an intense political uncertainty as we enter the election season, but structurally our economy has been able to weather high interest rates better than in Canada. Make no mistake though, just because the US is better off than Canada right now doesn't mean that the situation is good. The US is definitely in stagflation right now, where inflation has the persistent chance of making a comeback while job growth and economic growth in general is slow. A lot of people are still struggling in the current environment, and it's going to take more than a few interest rate cuts to get the real economy back on track. Now, the Fed has something called the neutral rate, which is their academic way of saying that that is the target zone of where interest rates are not restrictive, but also not stimulatory. There's no consensus on what the neutral rate is, but it's estimated to be in the 3 to 4% area. The Fed would have to cut much more to get there, which means that we wouldn't be in neutral rate territory until 2025 most likely. Judging from the data in the real estate sector, it's also highly unlikely that a few interest rate cuts are going to revitalize the housing markets. Affordability for home ownership is going to stay challenged, and it's probably a structural shift that more and more people will have to rent forever. So the conclusion is that Canada is about to do their own jumbo-sized interest rate cut, and they're doing it out of a position of weakness and need to save their economy. The US is lowering rates while economic data on the surface is still okay. And this means it's a mid-cycle adjustment, and there's the potential for economic deceleration if the Fed isn't behind the curve. Now, I've been in the camp that the US economy was in a recession earlier in the year, and the hard landing that I looked for has already happened for the white-collar job market. It was never really made official, so we'll never truly know whether we entered a recession or not, but I think it's clear from white-collar layoffs that many folks were in pain. Now that the Fed is easing monetary policy before the economic data has confirmed any real recession on the headlines, there's the chance that they actually avoid an official massive hard landing. This means that the US has several more quarters of Goldilocks economics before things get rocky again. If anything, the biggest risk in the future is a acceleration of inflation, as the Fed is now focused on preventing the labor market to look like Canada's, and their monetary easing policies will cause capital to flow out of money markets and more into risk asset classes. So I'll talk about this more in future videos. Make sure to subscribe. I provide periodic pre-market commentary to readers throughout the weekdays as a perk for joining my Substack, and I give private members access to our best stock selection ideas to position for the current and upcoming economic cycle. Thank you to NordPass for partnering with us today, and I will see you guys next time.